Okay, and welcome back, students who are taking Math for Business and Finance and Math Applications. And again, we're doing the Chapter 7 Discounts, Trade, and Cash, and this is the third video. I believe this will probably be the last one as far as theory is concerned. And something I maybe should have just mentioned at the very end of the last video, in that yeah, I am going over I'm going over theory here, but you'll see the application of it. So when we're doing the homework problems, okay, you'll see a lot more. Like I had gone and let me just jump right back down to that slide. I had been talking about these chain discounts, and I gave you the theory about how we arrive at whatever number it is by using the short way, okay, the net price equivalent rate. Well, I didn't give a lot of examples here. Again, you'll see those in the drill problems. So let's move on to the last two slides I have here, and we'll be done. Okay, an aid in calculating credit due dates. All right. In the textbook, they do show a number line, or what I call a timeline. And to be honest with you, I use this all of the time. Whenever I have anything that is structured upon anything to do with time. And basically what it is, it's like a number line. We all know what a number line is. We draw a line, we put a hash mark there, and we call that 0. And then we put, going to the right, that's 1, 2, and 3, minus 1, 2, and 3. No, plus 1, 2, and 3. Going to the left is minus 1. Nope, that's plus 1. So this is minus, 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 plus 2 and plus 3. Anyway, the point being here is that I draw that out as a number line. Well, I use the same concept as a timeline. If I have something, let's say the problem says on January 1st, and and this is not just, I don't use this just for credit terms. I mean, I use this for notes and things like this. I mean, if I had a 90-day note, let's say, I can go and draw my timeline like this. And I would label this January 1. And this is 90 days later, right? So this would be January, February, March 31st, okay? Or approximately there. And then I label it like this to show each month. So this would be February 1st, and this would be March 1st. And let's say the percentage was 12%, okay? Well, I would label this as 12, 1%, 1%, and 1%, for the simple reason 12% divided by 12 months is equal to 1% a month. So you see how I'm using the line in order to be able to label everything so I can get more of a visual representation of what my problem or my issue is. Okay, and that's why I use the timeline. If I have an invoice that's it's dated January 1st, and let's say my credit terms are 2% 10, net 30, and we'll go over that in the next slide, what this means. Well, I can draw a timeline, and over here I'm going to label it January 1st. And in 10 days, so this is 110, I can get a 2% discount. And if I don't pay it within those 10 days, at the end of 30 days, which would be January 30th, okay, everything in here is I'm going to pay the full amount. Everything in here, I'm getting between here and here, I'm getting a 2% discount. Okay. Now after the 30th, if I don't pay it by the 30 days, now I'm into penalties, interest and penalties, right? And so this way, when I diagram this out, I can see everything and I know when everything is going to be happening. And this is kind of important as we move on to the next slide here and talking about credit terms, because when we're talking about credit terms, we're talking about different days and different percentages and when things are available and when things are not available, okay? When the percentages are available or not. And drawing those timelines will make it easier for you to be able to see what it is that you owe, or what you can take. Um, and the thought just kind of occurred to me. I mean, when I speak to some students who, they end up trying to take an exam. Um, let's say they take an exam on, let's say this here is there's 31 days in March. So let's say they took the exam on 3/15, right? So they automatically assume that on 4/15, they think that's 30 days later that they can still take the exam. The problem is that March has 31 days. Okay, so they really can't take the exam on the 15th. They have to take the exam by the 14th because of the number of days, and that's kind of like covered, in the textbook in the chapter on calculating the number of days for specific things. But I'm getting a little adrift here, so let's get back to what I'm talking about here, right? There's kind of three general methods: the ordinary dating method, receipt of goods, and end of month, that determine our credit terms that are offered. The ordinary dating method is relatively simple, okay? In this case here, the example says it's 2/10 n/30, and what that means is it's a 2% discount if paid in 10 days. And net 30 means that the entire invoice is due 30 days later. Okay, so if I had that invoice from 3/15 and I count the number of days, 30 days going forward, because March has 31 days, it doesn't automatically mean that on 4/15 that's 30 days. No, that's 31 days because of the extra day at the end in the month of March itself. So this invoice would be due on 4/14, and if you tried to pay it on 4/15, now you're into the interest and penalties because it's late. Okay, and at the bank, when you have a bank loan, um, you know, they pay attention to these kinds of things. Sure, they do somewhat give you a little bit of a grace period, but you think about a company like Apple or Google or Microsoft, where their loan equates to tens, if not hundreds of thousands of dollars per day. Okay, they're paying attention to that kind of thing. All right, so with the ordinary dating method, okay, the way it's always written is a percentage by the number of day, and then of course net when it's totally due. Now it doesn't mean that that's the only way it can be written. It could be written something like this. It could be written 2% 10, 1% 15, and then net 30. Okay. Credit terms there is no standard. It's what you as a business owner decide to offer your customers, and you can offer it in many different forms. A very common and frequent one is this one. But it doesn't stop me from saying, okay, well, if I'll give you 2% off if you pay in 10 days, and then I'll give you an extra 1% off if you pay in 15, and then the remainder is due 30 days later. I can offer 2% 10, 1% 15, and an additional 1% 20, and then the net 30. Okay, right? Well, that means if you pay it within 2 days and 10 days, I'd get 2% off. If I paid it within 15, I'd get 1% off. If I paid it within 20 days, I'd still get 1% off. So this really should be 0.5. Or I could have made this way. It makes it a little easier to understand. I could have made this 3% 10, 2% 15, and then 1% 20, meaning if I paid it within 10 days, I'd get 3% off. If I paid it in 15 days, I'd get 2%. And if I paid it in 20 days, I would get 1%. Right? So my timeline would look like this: 3/15. So here's 3/25, 10 days, and that would be 3%. This would be 3/30, 15 days. Okay, and during this period, that's 2%. And then for, let's see, whoops, no, I'm sorry. Oh, I should have made this the first. See what happens when you're just flying by the seat of your pants. Let me back up here. Let's make this invoice date at 3/1. 3/1. That makes it easier. So 3/10, I'd have 3% off. If I paid it on by the 15th, I get 2%. And if I paid it by the 20th, I would get 1%. And then over here at net 30, all right, so that would be on 3/30, I would have to pay in full, and anything beyond that, including 3/31, would be, I would incur interest and penalties. Okay. So I hope you understand that. And then this also, never mind. I'm going to erase here, and because I'm at 10, almost 11 minutes, and I want to just get through the rest of this slide so I don't have to make another video. So that's the ordinary dating method, and that's the most common. Now, the receipt of goods is very similar in that you can have different term amounts. Like, here it's showing 3%, 10, net 30, okay? So I could also give 3% 10, 2% 15, 1% 20, and then net 30, all right? Again, as a seller, I can dictate the terms that I give for payment because I'm the one who's extending the credit, okay? And you can either, as the buyer, you can either like it or not. If you don't like it and you don't want to buy, that's up to you. But, if you're looking for credit, then you're going to need to follow what I'm, offering, because reality is you should be paying cash up front, okay? The only reason why we use, credit and having an accounts receivable or an accounts payable is to be able to facilitate, business. In other words, I'm going to make a sale that I wouldn't make, otherwise, and you're going to get something that you wouldn't be able to get otherwise. Think about a contractor. If he's working on a house, he might need, $3,000 worth of stuff, and he might not have the stuff in it. He might not have it in his pocket, but he can go out and get, use the credit, get the materials, do the job, get paid, and then pay me back. And it ends up being a win-win for everybody. Okay. But again, as the seller, because I'm extending the credit, I can dictate the amount of terms, the way terms are. And the receipt of goods, which is designated by the ROG, means that it's 3% 10 from the receipt of goods. Okay, so if I have an invoice, and let's say the invoice is dated 3/1, okay, and my terms are 3/10 net 30, all right, well, it doesn't matter so much what this invoice date is, okay? What matters is when I receive the goods, if this is what I'm offering as credit terms. So let's say even though the invoice is dated 3/1, but I receive the goods on 3/5, okay? Well, that means that 10 days from the 3/5 or 3/15, if I pay the invoice by 3/15, I'll be able to take the 3% discount up to the 15th. Even though the invoice was dated 3/1, it's not 10 days from 3/1 or 3/10, okay? It's 3/15 that matters, because this is when the goods were received on 3/5, okay? So receipt of goods ignores the invoice date. It's when the goods were received that the terms kick in, all right? And then you treat it the same way as you do the ordinary dating method, all right? If you're a little confused about that, do some of the homework problems, or give a call to an instructor to help clarify. But as you can see, having receipt of goods gets just a little bit more complicated than ordinary dating. But now when we talk about end of month, it becomes really complicated, okay? When you see something like 2% 10 EOM end of month, okay, what we have to consider is whether the invoice is dated, the invoice date is the 25th or earlier, or after the 25th. It has nothing to do with receipt of goods. right? Receipt of goods goes out the window. So I'm looking strictly at the invoice date. If the invoice date is before the 25th of the month, the 25th or earlier, that gives, and depending upon the term here, it says 2% 10. Well, what that means is you can take a 2% discount by the 10th day of the next month. So let's say my invoice was dated 3/20, okay? And what this means is that I can take a 2% discount by 4/10, okay? It's the 10th day, that's 4/10. It's the 10th day of the next month. So actually I end up with like a 21-day period here that I can take a 2% discount in, okay? Now, if I end up taking, let's say, um, the invoice is dated 3/26, okay? Well, what that means is that you'll get the buyer will get an extra month of time. He he won't owe the amount by 4/10. He's going to be able to get all the way to the next month, which would be 5/10. So he gains an extra month of credit time. So he's going to have it between March 26th and May 10th in order to be able to take the 2% discount. Okay. So the 25th and earlier, it means uh, you're going to be able to receive the discount by the 10th of the following month. And if it's after the 25th, then you're going to get an extra month. Now realize that this is 2% on the 10th, right? 10th day. I could have made this 2% the 15th, right? I could have made it any day that I want, all right? Um, but realize that, again, that's something that the seller is determining, okay? Instead of the 10th, now this is all getting pretty sloppy, so let me erase a lot of it here. Um, and I'm also getting pretty long in this video. Uh, I'm the one who can determine this. Instead of 2% by the 10th for the end of month, I can say 2% for the 5th EOM, meaning if I buy something, the invoice date is before the 25th, right? That's going to give me not only to the end of the month, but for the first 5 days of the following month. However, if the invoice is dated after the 25th, right, it's not only I have till the 5th of the month, but I have an additional one whole month, an additional 30 or so days because it's the 5th of the following month. Okay. Now remember, this here is like dated the 26th, right? And this is the 5th. If this was dated, say, 3/20, the 20th, I'd only have until the 5th of the month. But if it's dated the 26th, I have it not only to the 5th of the following month, but an additional 30 days to the additional following month. So I hope you understood that. Um, the ordinary method is by far what's used mostly, okay? And the terms can vary. It's not just one set standard that you see of 2%, 10, net 30. You'll see different percentages and different time frames, and sometimes you'll have more than one amount, more than one discount amount for different time frames. But by far, it's the method that's used mostly. Receipt of goods, it is used, and that's more along the lines of contractors and things like this that have to have stuff hauled to sites and whatever have you. The end of month is not used that often. I mean, for obvious reasons because of extending a credit period so far. But, if you're talking about something along the lines of maybe, I don't know, building a building or something like that, and you're talking about more than one contractor doing, one thing at a time, or let's think along the lines of a plumber and electricians working on the same building. You know, in order to get the contract done, they, they will offer the end of month credit terms to the vendors in order to be able to receive payment. Okay, so that's 20 minutes. I had hoped it was only going to be 10, but it is what it is, and we're done with all of the theory. So if you have any questions, do the homework problems. Call and speak with an instructor or email us if you have any confusions with this. Okay, have a great day.